Good morning and welcome to the Killik & Co market update. This week, the UK's FTSE 100 index got within 1% of its previous record high. Here's the 20-year chart, and you can see how close the index is to the previous record high that was set in 2018. The recent strength of the FTSE is due in part to the recent strength of the big mining stocks. Here we've got a 5-year chart showing the percentage returns of Glencore, Anglo American, BHP Group and Rio Tinto. Any that have gone above that black dash line have gained over 50% since 2018. Miners have risen due to optimism about the Chinese economy reopening. China has previously been responsible for a huge proportion of global commodity demand. For example, China has previously bought about 70% of seaborne iron ore. With China coming out of its 3-year period of lockdown restrictions, investors are hoping that China will start buying more commodities again, and that will increase prices in the commodity sphere. Microsoft has become the latest tech giant to trim its workforce, announcing this week that it will be cutting 10,000 employees, which is about 5% of its global workforce. CEO Satya Nadella sent a memo around to all employees, and we've picked out this quote. As we saw customers accelerate their digital spend during the pandemic, we're now seeing them optimize their digital spend to do more with less. We're also seeing organizations in every industry and geography exercise caution, as some parts of the world are in a recession and other parts are anticipating one. At the same time, the next major wave of computing is being born, with advances in AI. Clearly, a lot of firms have been ramping up their spending on digital transformation, and there may now be a period of slower growth as firms bed in and make the use of all the tech they bought during the pandemic. However, some areas of tech are still likely to grow, and Satya Nadella highlights AI here. Although Microsoft is letting 5% of its global workforce go, it's still making big investments into AI. For example, this week it has announced a $10 billion investment into AI company OpenAI. Here we've got a chart showing the performance of the technology constituents of the S&P 500 over 5 years. The dashed line shows where the index was before COVID. It had a great run in 2021, followed by a very poor year in 2022, but despite that, the index is still up by 90% on a 5-year basis. This week we had the latest inflation number for the UK. In December, inflation fell from 10.7% to 10.5%, which is certainly good news. But within that data, there are certainly some particular products and services whose inflation is much higher than that headline rate. For example, food price inflation is still far above 10.5%. Another area of concern was airfares. This chart shows the price change from the previous 12 months, and you can see that fares in December 22 were over 44% higher than fares in December 21. Higher oil and fuel prices will be a factor here, as will the growing demand given that we were still under some COVID restrictions at the end of 2021. Moving on to have a look at next week, it's looking pretty busy on the calendar. We've got results coming out from tech companies Microsoft and ASML and US defense company Northrop Grumman. That's it from us. Enjoy the weekend, and we'll see you next Friday.